When you're in a massive economic downturn and when real estate just the spigot turns off, you make sure that you're unwilling to fail. Finding other business arms that are able to have revenue in a downward trending market, it's going to make our business a lot better and stronger in the long run.
Welcome to Decision Points. I'm Doug Hudson.
I'm Scott Wood.
Welcome Chris Kopacek, founder and principal of Lone Star Development Partners in Austin.
Thanks for having me, guys.
Did I say it right?
Kopacek.
Kopacek.
Chris Kopacek. Welcome, Chris Kopacek. He schooled me up right before the camera went on, and I still messed it up.
It's all right.
You told me on the phone last week flying an F-16 was not scary at all, but this business stuff scared the out of you. Come on, you mean that?
I do in a lot of ways, yes.
Why?
I think in the F-16 we had excellent training, and they always were teaching you how to identify all the risk points that are in a mission and be able to mitigate them. Whereas, as you know, in business, you can't always mitigate everything, and you're always going, and fires always come out of nowhere to kind of sideline you. And so that's where I think when you start to talk about you've got now, a business with 30 some employees that are depending on you. And that's scary to me because you gotta perform and you can't fail.
So that begs the question. It sounds like you don't, which I would agree, we don't train very well in business, do we?
I think sometimes, you've got to instill that in your company culture in order to have a culture that is always kind of mitigating risk and making sure that you're making the best decisions based on the knowledge you've got available.
Were you trained in business?
I was in business school, thankfully, but my whole earlier foundation was flying jets. And so business was a little bit of a later in life transition for me.
Yeah. Yeah. Where were you raised and how did you end up in the cockpit?
From Des Moines, Iowa, and got a scholarship to go to the Air Force Academy and ended up at the end having a slot to go to flight school if I wanted it, and ended up deciding to take that. I was fortunate enough to graduate high enough in my class that I got to pick what jet I wanted to fly, and that happened to be the F-16.
So back up.
Said so casually.
So when you applied to the Air Force Academy, was the intent to fly at some point?
I didn't know.
Yeah.
It always sounded like a really exciting thing, but I don't think it was till I got there and got to do a couple of their flying programs that was the
And then you were like, this is pretty cool.
Exactly.
Yeah. And so then tell us how the offer works to get to fly and how you get to pick your,
Sure.
like how that.
Yeah. Take us behind the scenes.
Yeah.
Sure. So
pull back the curtain on that.
You get ranked across several different things at the academy. It's your academic performance, your military performance, and then your athletic performance. And they kind of take a blend of those three scores and they kind of rank and stack you against your whole class. And you've only got a certain amount of what we call pilot slots available. And so you get to see at the end, you put in kind of your dream sheet for what assignment you want. And if there's pilot slots left, when they get to your name as they go down the list from 1 to 1,000, you're getting what you asked for. And if there's no pilot slots left, then you're going to your second or third or fourth choice. And so I was fortunate enough, we had a decent amount of pilot slot in my class. And so was fortunate enough that's what I put as my first choice. And that's what I received.
That's awesome.
So once you get that, you said, then you get to select, if you get chosen or selected for pilot, you get to select your plane?
Not until the very end.
Okay.
So you go through your first 6 months and it's primary and everyone flies the same airplane.
Okay.
And then it basically...
What are you flying at that point?
At that time, it was called a T-37. Now it's called a T-6.
Okay.
And
had you done any flying at that point, or does the
almost none? Just the little things at the academy. So they had paid for us to go get a private pilot's license.
Yeah.
So that's part of it. You're all going and getting your private... Yeah. You're flying...
Yep.
Little Cessnas or whatever it is.
Exactly. Right after we graduated, that was part of the training that they paid for.
Okay.
And you kind of got a score out of that. And then like 35 of us all started in my pilot training class. And then you get to 6 months in and they call it a track select. And so I think 6 guys out of our 35 got to go on the fighter and bomber track, which is what I ended up doing, which was maybe the more challenging one to get. Because I think if you didn't perform super well, you weren't even eligible for that. Mm-hmm. And then we had it's called like the cargo and tanker track. And then they have helicopters, and they have props is a different track if you're going to fly C-130. So that's the 4 different avenues you can go. And then of our 6 guys, you go through another 6 to 7 months of really high intensity, like lead into fighter training in what's called the T-38, which is a really high performance airplane, twin jet that can, break the speed of sound. And then they kind of rank and stack you there at the end of that, and you put in your dream sheet, and that's how you get to choose what jet you're going to.
So how many of you could choose the F-16?
Everybody could put it first on their list, and then it just depended. I think we had 3 F-16s out of 7 slots.
Yep.
And the rest were bombers and other types of non-fighter airplanes.
Yeah.
So this is a hard question because I can tell you're a humble guy. But like, what do you think was the difference for you? Like, what made the difference? What allowed you to get to that level?
Obviously everyone's competent when you get there.
Yeah.
They've already been screened pretty hard. And I think for me personally, it was almost like having played a little bit of football in high school and then at the academy. I think it was like the challenge of being on a team, a high performing team. And we do a lot of formation flying, a lot of things where you're relying on your other guy to do well.
Interesting. Yeah.
And I really enjoyed both the competitiveness and just the team aspect of that. And then I think for me personally, the hands part came pretty easily, maybe more than like studying all the knowledge and all that. I probably wasn't as excited about putting in those long hours for that, but the hands part came well. And so I think that was what kind of helped me to do well in that program. Was it kind of made sense how to fly an airplane.
And then how many years were you flying the F-16?
I flew total in the Air Force about 11 and a half. And so about 2/3 of that was into the fighter. And then I came back to be an instructor my last assignment.
Awesome.
So
thank you for your service.
Thank you guys. Appreciate that.
Thank you very much. And did you know you always wanted to be in the military?
Not at all.
Yeah.
I looked at the Air Force Academy and places where I could, try and play a sport.
Yep.
And also get a full ride scholarship. There weren't a ton of those options available, and it was a good school. And so that it ended up being the top of my list.
Yeah. It's interesting when you said the 3 factors, one of them was athleticism. Obviously you played football, so you're a great athlete. Others probably didn't, were on maybe a D1 team, but they were great athletes. I guess my question is, why is athleticism so important in that equation?
Boy, that's a great question. I think to do well in the athletic part, it's much more about performing within a team. It wasn't just like raw athletic.
They're looking for that teamship.
And I think that's what the military really kind of prides itself on, is the ability to go and operate as a team and to go and execute as a team in a really coordinated fashion. And that's where I think the military has a lot of ties to the business world, in that you really learn how to lead and drive kind of the vision for a team. And I think that's why the military, when I talk to younger guys that are thinking about going to an academy, I really recommend it highly, just because it really does. You kind of get, it's like a leadership training laboratory where you get a lot of tools to be able to apply to both your current life, and then I still apply a lot of, I think, those things that I learned at the academy and flying jets today to our business.
I'm sure you do, and I'll get back to the origin story, but I don't want to forget the question here. How do you every day translate your training into Lone Star, into your business that you and your partner founded?
It's a great question. Truly, I run kind of our capital markets side of the group, which is raising debt equity, our co-GP equity, and then all the other financing to get, a $60 to an $80 million project out of the ground. One of the first things that I'm embarrassed to say, I didn't really think about this until I got pretty deep in the business world, but coming from that background, when I meet investors or potential investors, just kind of the trust that is formed when they know your background, and that you can immediately kind of dive in and engage with them, and they know kind of where you came from. I think that's one of the things that I think a lot of people wouldn't think about right away. And I think trust is one of the huge ones. And then I also think discipline, just being disciplined enough and for groups to put their faith and trust in us with an investment. They know that we're going to be disciplined to both run all of our due diligence, put them in the best position they can, make sure that they're our number one focus as we're their fiduciary, and that's our responsibility, is to our investors first, and to, even Lone Star second in a lot of ways. And so I think having that military background really does, it provides maybe just an extra layer of, they know kind of the cloth of where I guess we've been cut from, and who they're dealing with. And I think it does. It creates trust. It creates a level of a transparency and honesty. And I think a desire to work as a team to go and execute well, because essentially they're your partner for the next 3 years or however long that project takes to come to fruition.
How big is the team at Lone Star now?
We are currently just over 15 employees, and then we're in the midst of bringing in a new construction arm that's focused in a little bit more of the affordable space, and that'll effectively more than double the size of our company. And so we'll be up, just under 40 employees here in the next several weeks as we integrate them into the team.
So a minute ago, let's pick up on this nuance. A minute ago, you said 30 people, 30 lives to take care of. Is that 15 times 2? So 15 plus?
Correct. There's about 17. Well, no, I'm actually 17.
Or were you already projecting forward to
in that
group?
new company?
Okay.
Yes, sir.
I was just curious how you were thinking about it.
But then when you talk about spouses and families, it's a way bigger
bigger
team
number for sure
that we're responsible for. In a lot of ways.
Yeah.
How is some of the discipline? I hear that. I think that's such a. I feel like over the years I've had certain friends that, they'll almost only hire ex-military people because they feel like that is a proven person. I've heard people talk about hiring only collegiate athletes, not because they were amazing athletes, but because you knew they had to wake up every morning at 5 a.m. and go to the gym. That discipline was assumed in a sense or shown. But day-to-day processes, how do you think, you talked about training. How do you all think about training those 15 people or this new 25 or 30 that are coming on board?
Sure. Good question. I think the first thing that we do as a team is we try and sit down and kind of go, what are the big rocks that we've got to figure out? So casting that vision and the thesis for the company so that everyone kind of knows what the end all goal is, either for this next project or for our next 5-year plan or our 10-year plan, and kind of casting that right away from the outset so that everybody knows, even if they don't exactly know what their day-to-day role is, they know this is where we're headed, and this is where the whole team is hopefully in lockstep and moving towards. And if we're not, then along the way, I think it's always, reviewing people's both performance and kind of what our objectives are, and then staying true to, what those objectives are so that we can go and achieve them.
What's the thesis of Lone Star?
We are here to build excellent multifamily and build-to-rent projects that keep in mind returns for our investors first, a awesome place to call home for our tenants and our guests, as we would call them, and then to be able to go and execute as a congruent team, as we're a vertically integrated development platform that takes everything from raw land into a full plan set that's permitted by the city, and then our construction team moves right in, both seeks to value engineer or cut costs out of that design and that build, and then we go and execute on that build, manage the lease up, and then manage the institutional sales process on the back end, where we sell that entire leased up community to a larger, whether it be a pension fund or a private equity firm, or a large institutional capital partner. So those are the things that we really have to orchestrate and execute on a team in order to really find success. And it's a lot of times it's a 3 to a 4 year process, kind of from the cradle to the grave.
Yep. How was the
go back?
Yep.
Sorry, you're like,
no. You're taking it right where I was going.
Take us back to the beginning, and kind of like how you met your wife, and tell us a little bit about your family and just
sure. So you guys will make fun of me. I was kind of the old bachelor in the room. My wife and I met about 9 years ago now. She was living in Atlanta. I was in Austin. We dated long distance for about the first year. In fact, we kind of talked long distance on the phone for 2 or 3 months before we ever met in person.
How'd you meet her?
We got introduced through a mutual friend.
Okay.
And so that was a really cool way to get to know somebody.
Mm-hmm.
Flew to Atlanta. Have got a pretty hilarious story of our first date.
Bring it.
And well, so I fly. My flight's late.
You fly yourself?
No, I I wish.
That's really embarrassing if you were late and you flew yourself.
I wouldn't have been late if I would have flown myself. And so we get downtown and, it's like 10 or 10:30 and all the restaurants are closing shop. And so we convinced this kind of fancy steakhouse in downtown Buckhead to stay open a little later. And we
Which one?
Kind of sneak in. It's called Chops.
I've been there. Yeah.
And so we're hanging out and I asked the guy to give us a good table. And so he gives us this table where we're literally, it's only one seat and it's like a lover's chair, right? So it's like this
and
game
you've
of
never
Thrones
been in person.
chair.
What's her
We've
name?
Never met Heather.
Heather.
And so we're sitting literally next to each other at this table because there's a path, a walkway behind it.
Yeah.
So you really can't have another. And so it's a little awkward because you're having to like look over at this person and have natural conversation. And it worked out fine, but it was funny. We met these ladies that were celebrating a birthday party when I was going to the restroom, and I started talking to them, and they were a lot of fun. And I said, "Hey, I'm on a first date. Can we hang out with y'all?"
Yeah.
And once they pulled us over to their table, and we started hanging out with all these. In fact, I think she was celebrating maybe her 50th birthday. And so we start hanging out with all these Atlanta ladies and having cake and closing the restaurant down. And they were staying open for this big table of 16. I think that's when Heather and I really hit it off and we're having fun. And it was just kind of a funny.
You talking about mitigating risk. That was a bit of a risk.
It was a risk.
Heather could have said, so you're inviting me now to go sit with 16, Atlanta housewives.
I needed to up the fun quotient and down the awkward quotient a little
I'd say it paid off.
Yeah. It ended up working out
Mitigation.
well.
I like it.
Yeah.
So we actually just got married 2 years ago.
Congratulations.
And then just had our first baby girl 2 months ago,
Awesome.
January 2nd. So
Congrats.
What's her name?
Camden Rose.
Camden Rose. Amazing.
So we are all the new things for a new family.
That's great.
Congratulations.
New parents, I should say.
That's great.
So walk us through 11 and a half years you serve, and do you fly in combat missions? And near you?
You know what? My squadron, they were just coming back from the war when I first got to Germany.
Yeah.
So it was already kind of over, and then their next rotation was just after I left. So my time in the F-16 was in Korea and in Germany, and we went to Turkey and did some other deployments, but nothing to where we were in combat. So it was pretty fortunate.
Yep. So what's your transition like, and how is Lone Star your immediate after, or walk us through kind of that?
How do you decide it's time to?
Yeah.
So I kind of always knew that I was going to get out when my time was up. You have a certain years of commitment you have to spend for pilot training. And so I had started applying to business schools and really thinking that was a good way to kind of run the pivot. And I really liked Texas.
Mm-hmm.
I liked Austin. And so decided on UT.
Okay.
Had a couple of different offers on both the West Coast and the East Coast, but ended up choosing Texas more because I like the living situation. That's where I wanted to stay afterwards.
I have to ask, because whether we keep this in the podcast or not, did you choose Texas over Stanford in that conversation, or what was your West Coast options?
I really wanted to go to. I actually was Haas, UC Berkeley.
Okay. Yeah. Okay.
Was the one that I was applied to and really wanted to try.
Awesome. Yeah.
But I do think Stanford's an awesome school.
Yeah.
It would have been fun.
Yeah.
They're a little different. They're much more of a tech-focused MBA program, whereas I really liked schools like Texas and Columbia had a really heavy real estate focus, and that was kind of what I knew I wanted to go into some sort of finance or real estate.
Okay.
So
that
was another thing
driver
really appealing for Texas.
Okay. So you go to Texas for real estate.
Go to Texas. Yep. And then spent 2 years there. Worked for a private equity firm when I first got out. And then about 2.5 years after getting out of MBA program, we started Lone Star. Had met my founder or co-founder in business school. He had gone on to work at a venture capital firm, and we came back together and formed Lone Star in kind of late 2014, early 2015.
Talk to us about that decision making, Chris. Your co-founding partners. What's his name?
Ryan Larson.
Ryan. You're both leaving probably good jobs. What was the thought process to getting the courage, the equity, the cash, whatever, to make that decision to start?
Sure. So we were looking at some smaller deals, and obviously the real estate market back then was really on fire. And I think as we started to kind of put this together on a small scale, we just kind of randomly got introduced to some folks that were selling some bigger deals. And we were like, hey, if we can put together a 4-plex or an 8-plex, is there really that much more work to put together a 200-unit multifamily project? And there definitely is, but it's not as much as you would think. And in some ways, the capital markets are more efficient and more geared towards investing in larger projects versus the smaller one-off. It's much more private capital down in the lower dollar valuations of the project, or in the lower capitalization amounts. And so I think we made the decision right there to try and do some bigger deals. We immediately found a piece of dirt, and back then you had to do things very entrepreneurially because you didn't have like a ton of capital, or your last name wasn't Dell. And so you weren't coming from a family to where they would kind of back you. And so we raised some money in the form of a grant from the city, bought this land for a 235 unit, $55 million apartment complex. And now all of a sudden we were in the game, and then we applied for what we call a HUD loan versus doing traditional financing. And so we were able to cobble together a project that we probably didn't have the business to do. And along the way, we realized we were going to have a co-development partner, as you do with like a larger HUD project. And so we brought a larger group on, and it kind of gave you that gold-plated resume that you needed to get the deal going. And the rest is kind of history. That was how we kind of got our start. And then we had a partner who, his father came from owned one of the larger private home building firms. And so immediately we had in Austin, and we had a kind of a built-in GC that would also help us with finding, some of the capital, securing our debt and guaranteeing our debt. And so we were able to, I think, get the first several $100 million of projects out of the ground in a pretty efficient fashion, all things considered. And so we're blessed and lucky enough to do that. And I think once you start to build that track record, now the big focus came to, okay, now how do we strategically grow the team? How do we fill in any, kind of blind spots or gaps that we have in the team, so that we can really now go and execute as much more of a kind of a mid-market type of real estate development and construction firm.
What's one of the best decisions that you and Ryan have made, and what is maybe one of the worst decisions you and Ryan have made?
Best decisions was to vertically integrate. I think it's going to continue to pay off for our business over the next 10 years. It's allowed us to be much more multifaceted, both in like our cash flows and in the ability to do projects that are maybe funded through grants or through bonds, backed by the U.S. government, so that when maybe the economy's down or institutional capital is kind of frozen like it is right now, we can pivot to other asset classes. And then I think one of the worst decisions, and time will only tell on this, but I think we took a fairly aggressive growth trajectory early on, and we got to where, we had a large group out of New York representing us, and we went out to all the big firms, kind of $5 billion and up of AUM, to do like this programmatic joint venture of 4 projects. And at the time, this was in 21, things were rock and rolling.
Yeah, booming.
So we got 14 term sheets. We thought we were off to the races. And all of a sudden, we choose a group, we get moving towards all the joint venture paperwork. We call that creating and drafting the JVA, or the joint venture agreement. And all of a sudden, obviously they got wind through their friends that the Fed was going to start to raise rates, or through connections they had, and they said, "Hey guys, I don't think we're going to do this deal." And so that was tough. And now we've had to kind of pick the pieces up and really go fund all those projects on more of a one-off basis. And we still have a couple we've got to fund. And so, I don't want to say that it was like the wrong decision, but I don't think we'll put our company in that risky of a spot in the future.
Mm-hmm. What would you have done differently?
Boy, I think I would have not closed on the land. I would have waited until we had the capital in hand before we'd have gone and raised money and closed on the land. Mm-hmm. And I would probably have found multiple capital partners. So a singular capital partner for each project, just to kind of limit my exposure of somebody all of a sudden, less risk that 4 people pull out versus 1. Although, with the severity of what happened in 2022, all 4 still might have pulled out. Yeah. So that was a tough road to navigate for anyone, no matter what circumstances you were in.
Yeah. Mitigation of risk is so valuable. You just can't mitigate life, though. Stuff still does happen.
That's right.
Oh,
and you asked something earlier, and I'll just interject this. You talked about what types of training that the military equips you for, and you guys will chuckle this comment, but I think one of the things that the military does prepare you well for is there's just some painful times in there. And we talk about it as, it's kind of a, just an odd reference, but we say it's the ability to deal with suck.
Yeah.
You just have to deal with suck.
Yeah.
And I think some of that really prepared me for when you're in a massive economic downturn, and when real estate the spigot turns off, and instead of getting frustrated or, wanting to throw in the towel, you immediately you go back to the grind, you pivot, you change your business plan and strategy, you call your investment partners, you're very transparent about what's going on, and you just grind, and you make sure that you're unwilling to fail. And I think that is something that the military and guys that have been in combat will talk about, in terms of just there's no other option than to succeed.
Yeah.
When you have people depending on you, and I think that's something that has been very valuable to me, to where you don't give up, and you figure it out. And it may not be easy, and it may not be fun, but you figure it out.
We don't talk about this a lot. No, we don't talk about this on every podcast, but most podcasts, most guests have a story where they've had to deal with the suck. And it's just, you just got to wake up every day and just go grind away at it until you eventually make some progress. I'm curious, was Ryan in the military?
He was not.
Okay.
Nope.
So give us a little bit of insight into, what brought you two guys together and kind of what you saw in each other.
Ryan had a really interesting background in that he had been in the multifamily space kind of right out of college. And then he started training a lot in Brazilian Jiu-Jitsu, and actually ended up becoming an MMA fighter for a while. And so I think that's where, on his side, that's where a lot of that tenacity and some of that, you maybe liken a lot of that training and that discipline and knowing how to really adhere to a regimen, in terms of controlling your weight and all while training, for hours and hours a day. I think a lot of that is very similar to, what goes on in military training.
It's dealing with the suck.
Yeah,
a lot.
Dealing with the suck. Exactly.
A lot. Yeah. I'd say so.
Yep.
So where do y'all meet?
In business school.
You met me. Yeah. Okay. Yeah.
Yep.
So you're kind of watching him go through this training. And
he was just finishing it. This was his pivot. He had gotten injured, and he was going back to business school as his way back into kind of higher levels of whatever, something finance oriented.
Scott, I don't know how you feel about it. If you want to redirect it, please do. But I want to go back to what you just talked about there for a minute, Chris. I would think, there's a guy in my head right now, and I won't mention his name, but wonderful business, and it has just been blindsided and gone a complete 180 degrees south to what he thought. Walk us through some of the, as you know, our audience are business owners, and not every day is just a new mountaintop. What are tools? What are pragmatic? You got a team. You got to try to. How do you lead in the suck?
Sure, that's a great question. And I don't know. We'd have to ask my team if we're doing a very good job at sometimes.
We'll ask them later, but they're not sitting here right now. We're asking you. We'll do an audit on them later.
I think you've got to constantly, Ryan and I meet every week for kind of a strategic planning session every Monday morning before the week kicks off. And so I think we're always trying to bounce ideas off of each other, figure out ways to, hey, we've got to pivot here. We've got to change. What we're doing right now isn't working. Or, and we've learned this over time in our world, it sometimes it's not even, it's a bad strategy. It's just the current might be flowing so strongly against you that only the, 30-year track record, billion-dollar firms can actually go against the current in the severe kind of, let's just call it downturns. And so I think finding where there's flowing water and what I'd call that is opportunity. And that's a big thing with our business. Right now I've got a perfect example of this. And my partner actually helped source this to where we're kind of going, hey, we're having a tough time finding the ground up development, what we call LP capital for deals. And so we're buying this general contracting company, and it's got hundreds of millions of dollars of projects that are already funded by U.S. government tax credits. And so we get to step right into this and start generating cash flows to where some of our projects have been more, stagnant in terms of their cash flow generation, because we've got to get them funded and out of the ground. And I think that's one of the ways that we're really pivoting Lone Star to make it much more of a business that can survive both in an upswing and in a downturn. And the way I look at that, and all businesses are different, so I don't want to say that this is the only solution, but having more verticals that are revenue generating and that can do so both in good and bad markets for us
aren't necessarily correlated to each other.
Yeah,
exactly.
Yeah,
and our business was hyper correlated.
Like a good investment strategy as well.
Yeah. With that, both all three of our pieces, development, construction, and acquisitions, were all kind of based on market rate projects, and they're all fundamentally correlated to how the capital markets are performing. If the capital markets shut off, that deal flow dies way down. And sometimes there are groups like y'all's that will invest dollars into ground up development projects, but you kind of need those groups that can write, as you get into the bigger projects, $25 to $30 million checks. And that's challenging to kind of aggregate together with a bunch of smaller check writers. It takes a lot of time. So finding other business arms, and we looked at a bunch that are able to have revenue in a downward trending market, I think is hyper important, and one that it's going to make our business a lot better and stronger in the long run. But we had to go through some of that pain and some of that suck to get there. I don't think we would have been pushed to doing that unless we had experienced that.
I'm sure you haven't. I've never heard that term, Chris. I think it's an awesome term for business owners to think about finding flowing water. I mean, that's a really good visual that, is there something, again, I could also hear some people saying you got to be careful of chasing shiny things, but cash flow is everything. And so finding that flowing water, whether that's a trend, whether that's ways to generate revenue, I think it's a great analogy and illustration that people can kind of hook onto. So what's it look like for the next 3 to 5 years as you and Ryan think about strategic initiatives? How do you all view the world? You encouraged, discouraged?
I think as a developer, you're paid to be encouraged always. You got to stay optimistic.
Yeah.
I think the ship is turning around, and at least in Texas and in the ground up development space, we're starting to see rents really flatline, and I think starting to return just slightly to the positive, which is kind of an early indicator that the markets slowly turn around. One of my business school professors would always talk about how the markets can remain irrational much longer than you can remain solvent. And I think what I got from that advice was, we have no idea how long this is going to take to turn. Mm-hmm. And so we've got to really position our company in a way that we're cash flow positive, solvent, and executing, well, regardless of what's going on. And so, we've made a bunch of changes to insulate ourselves from being, just fully dependent on institutional capital. And I think those pivots are going to pay off. I also think just in any business, when you have had a sustained downturn, whether it be in profits, whether it be in availability of capital, or whether it just be in the price of whatever you're either selling or, in our case, renting. And that's been one of the biggest challenges in our industry, is just that rents are down. And we had this massive overbuilding that kind of started happening in 21 and 22, and that supply has been dropping in 23 and 24. And so, I think one of the biggest things that we're focused on is coming out of the downturn poised for success.
Yep. Because
we really do think in, call it 26 or 27 or 28, at some point, the switch is really going to flip. We've been underbuilding housing for a long time. Mm-hmm. We're in one of the greatest underbuilding kind of as a percentage periods today than we've been in, even more than coming out of the GFC. I think the last time was in like the mid 70s that we've underbuilt to the tune that we are today. And so I think that's going to snap back. And so I think we're excited. We just have to make sure we've got a company that's really has the cash, has the team in place, and has the right deals in place, so that when things do come back around, we're ready to poised to capitalize on those. And I think that's a bigger challenge than a lot of people realize.
Yeah.
So there's a couple of things I want to tug on here. So, I'm reading between the lines a little bit, so just correct me where I'm wrong. But it seems like you and Ryan, for the last, call it couple years, like everybody else in the real estate business, you've been sort of fighting the battle of capital markets and interest rates and, money not flowing and rents, declining, and just all the stuff that's been going on in the space. And so I'm curious how much work you got, and you're at a bit of an inflection point in terms of size and scale, particularly with what's about to happen with this next group that you're buying. How much work have you guys done on sort of the operational infrastructure and process and vision and values? And, we sort of, the easy term is EOS, the Entrepreneurial Operating System. I'm not sure if you're familiar with
Sure.
that. Have you guys implemented anything like that, or have you done any work in that space, or have you felt like you've been more just kind of fighting the battle here for the last couple of years?
I think it's a mixture of both. I think you fight the battle in order to kind of triage and stabilize the company once things kind of turn. But then I think it's a great time, to your point, to really start to implement maybe some changes and really maybe come up with, hey, this isn't working. And so we're going to change both our culture, and the way we do business. Maybe not drastically, but make edits and make changes, whether they're minor or more major, in order to have a more efficient business. And so, yes, we have. In fact, we've read, a couple of different books that have kind of for lack of a better term, an EOS that they lay out, and even like a whole plan in order to get you into more of a high performing team. And so we're working on trying to implement some of those things right now. And it's a perfect inflection point for that. I think anytime you merge two teams, you really want to be hyper focused on culture and that integration, because I think that's, how the next couple of years are going to go. And from an execution standpoint will be how well we merge these two teams together.
Mm-hmm. What are y'all reading?
A book called Traction.
Yeah. It's what EOS is based on.
Yep.
It's absolutely, yeah.
Yep.
Good for you guys.
Phenomenal book. And you know, I've both been listening to it in my car and then also reading it kind of over and over, because there's some pretty complex things that I think if you really want to implement them, it takes a while to really think through, okay, this is what you need to do, but then how to actually create that change in your organization is a whole nother set of kind of thinking and processing and how you're going to change things.
One of the things we talk about a lot on the podcast is just the sort of 4 pillars that we advise business owners and entrepreneurs on, you know, and 2 of them are kind of personal domain, and 2 of them are in the business domain. The personal ones are purpose and vision, and then, you know, wealth planning, which is kind of what our day job is. And then on the business side, it's this sort of organizational, operational excellence. And you could sort of put EOS as the topic, you know, or the term to use to kind of wrap that conversation up. And then how you think about valuation and enterprise value creation are the other 2 pillars on the business side. And so you guys are at that point of complexity where, you know, 15 employees going to 30 or 40, like your complexity is going to go up a lot. And, you know, having some of these systems in place will be really beneficial for you guys. So we've been running EOS at True North since 14, maybe 16, somewhere in that time frame. And single best decision we ever made was to hire an EOS implementer and to help us implement it. So to the extent that there's some things in there that are complex and you want help, there are good people out there in the marketplace in Austin and in Dallas and all over that are, you know, EOS implementers who've been trained, you know, to help you guys implement.
Yeah, we'll have to talk more of that. I would think there's probably some consultants that you could hire in that.
That's essentially what implementers are. They're consultants. And so
they've been certified by EOS, the company.
Yeah, we absolutely can jump to that conversation. And a fair amount of our podcasts, Chris, we've got into it because, again, it is one of our 4 pillars that we've helped with. It's, you heard Scott just say it. I mean, single best decision True North's ever made for the organization. I want to, for a few minutes, how do you and Ryan, do you all talk about exit strategy? Do you all talk about building a business that is prime for a sale? Is that a conversation y'all have? Doesn't mean you're going to sell tomorrow, but do you all have that kind of conversations?
Absolutely. When you start a company, and I don't know if your, you know, experience was the same, all you're thinking about is how do we go and create revenue and create value for our company. And I think it's not until maybe you're 5 or 6 years in that you start going, okay, you know, now what's the goal here? And I think one of those goals for us is to create something that has enterprise value that we can actually sell and or transfer to employees, you know, at some point if that situation were to present itself. And so, interestingly enough, development firms don't really typically trade on a multiple, but construction firms do. And so implementing a much more construction-centric focus right now for us is one of those ways that we actually can build some enterprise value and get to a company that has a valuation and that has kind of the ability to be traded. We're definitely not there yet, but and then, you know, I will just tell you without giving away too much of our real secret strategy, you know, we'd love to bolt maybe a couple of different businesses around that that all feed kind of our 4 now core business verticals, which is development, construction, acquisitions, and capital markets, and have ancillary pieces or even companies that maybe we buy that we can bolt on that all feed business into those, but then also our core developments or building a project feeds those ancillary companies deals. And so that's definitely something that we talk about a lot. I'm embarrassed to say it took us several years before we started to really look at our business from that lens and look at all of our current or present growth forward with the lens of how do we create true enterprise value and something that we can sell. But I would say we're playing catch up a little bit, but it's exciting. And it really does. I think it makes your business better too, because you look at everything you do from the lens of profitability and what someone else is going to, you can lie to yourself a little bit, but you can't lie to an outside person that's valuing your business. And so it really makes you take an honest look at your business and how you're valuing that.
Well, the nice thing about having that perspective too is that now every decision that you and Ryan make is with an eye towards that, right? Like once you kind of locked into, okay, ultimately, like there's a lot of goals and priorities, but one of them is to create something that has enterprise value, that whether you trade it or not,
Correct.
could be tradable, right?
100%.
And, I've always, the old saying of, if you're going to build a business, you might as well build a business that has value, that is tradable, even if you never trade it, because if you don't trade it, you just bought it essentially. And so the fact that you guys have gotten clear on that, now every decision that you make along the way is with an eye to, okay, we got to keep that in the back of our mind, that's part of the ultimate goal that we're trying to achieve.
Absolutely.
And I appreciate your, Scott addressed it already, your humility, Chris. It took you a couple of years, and I would add, you can course correct me, that it took a little pain for y'all to maybe get there as well. But there are so many businesses that never even really think about that until they've gone way too long. So the fact that you guys are already starting to think, can you say you should have started from day one? That's easier said than done. But I think it's great, and I would imagine through some pain that you all kind of got there. So what do you think is the biggest struggle for the next 12 to 18 months for you and Ryan in the business?
I think it's still going to be finding institutional capital to fund some of the projects that we already own land for. We definitely have some really unique strategies that we're implementing right now that are going to help us get that out of the ground. But I still think it's just a grind.
Yep.
Because every deal's thin. The margins, high interest rates are making everything's less profitable than it was 2 years ago. And so, it just that we're paddling upstream.
We're dealing in the suck for at least another 12 to 18
100%.
months.
100%.
Okay. What is your holy grail project?
Boy, we're definitely not there.
You're not there?
I will tell you this.
I love that smile, though.
Yeah.
Do you see that? Go.
One of my mentors always used to talk to me about how Holy Grail, or what they call trophy developments, are the ones where you lose money and get your butt handed to you.
Sounds like ego.
And so, I think for Lone Star, creating a brand and a vertically integrated, multifaceted company that has, multiple verticals of revenue generating, that kind of call it, I guess just verticals.
Yeah.
Would be that holy grail.
Yeah.
Would we love to build maybe a high rise someday? Sure.
Yeah. Sure.
But do I need to? Absolutely not. I think we really want to stick in our lane to doing projects that we rinse and repeat over and over. We become experts. That's one of the reasons why we had looked at doing a bunch of development projects in states like Colorado, Oklahoma, kind of the next ring around Texas. And we've made the deliberate decision to not do that because we want to be Texas experts.
Yep.
And we want to keep kind of our laser focus here, both from a market standpoint and from a product standpoint, which is, we build master plan multifamily developments and master plan build-to-rent developments. And we don't stray too far from that thesis. We will do some land and some other things. And as we grow, I definitely think we want to bolt on some additional revenue generating companies to that core kind of 4 verticals. But we're a long way from blue sky. I don't want to. Maybe someday I'll tell you.
That's a great phrase, though. I love what you picked up from your professor, Chris. Incredibly grateful. Obviously, you and Ryan have made a lot of great decisions. I appreciate your courage to share a few of the tough ones. Thank you very much for your time.
Thank you guys so much for having me. It's been awesome.
Yeah, it's been great. Thanks.
Thanks for joining us on Decision Points. Have a great rest of your day.